Billion dollar vibes only. But more importantly, does Celsius have what it takes to jump either Red Bull or Monster Energy in the next several years? So I'll get to the meaning, or I guess the answers around that introductory question a bit later in this content. But as I normally do on my quarterly financial content of publicly traded functional CPG brands, I will use the recently filed earnings report, notes I took from listening to the earnings conference call, and any relevant publicly disclosed news. In this case, it's the 2023 quarter four period ending December 31st of 2023 for Celsius Holdings to kind of obviously update you on the performance of the Celsius energy drinks, but also use it as the backdrop to discuss market insights within the broader energy beverage category. That being said, let's start with some revenue numbers to set the foundation. In the quarter, Celsius Holdings had revenue of $347.4 million, which was up 95% year over year. On a quarter over quarter sequential basis, revenue was down 9.7% after that record Q3 revenue number. More importantly, Celsius Holdings smashed through the billion-dollar mark in its full year revenue numbers. In 2023, the energy drink brand generated $1.32 billion in revenues, which was up a staggering 102% year over year. An additional cool data point shared by Celsius, according to IRI, over the last 52-week data period ending December 31st of 2023, Celsius was again the number one brand driver of dollar and unit growth in the energy drink category. Celsius was responsible for 31% of the category growth, driving $1.09 billion in incremental dollar sales. Breaking out the quarterly revenue geographically, North American sales were $332.8 million, which was up 97% year over year. This doubling of revenue was driven by increases in total distribution points and SKUs per location. On the international side, Celsius had quarterly revenue of $14.6 million, which was up 68% year over year. This growth was driven in large part by successful innovation launches, increased velocity, and brand awareness. Though Celsius saw strong international growth of 52% in 2023, it hasn't always been smooth sailing for the energy drink brand. That relatively weak performance is due in part to themselves, as Celsius had smartly focused its attention and resources on fueling the insane growth within the domestic market. But that's starting to change inside Celsius, as the brand believes this is one third of the strategic pillars that presents significant opportunity for incremental growth over the next 3 to 5 years. And you can already see some of the early international market development groundwork starting to formalize. Celsius formed a new relationship with Suntory Beverage and Food to serve as its exclusive sales and distribution partner in the UK and Ireland. Sales under this arrangement are expected to begin in the early second half of 2024. We also saw the first major international market expansion under the PepsiCo umbrella as sales and distribution activity in Canada began in December of 2023. Then Celsius and PepsiCo will use those learnings along with emulating the Monster and Coke international structures for further expansion. Speaking of Monster Energy, the international revenue portion of their business is around 40%, and it's outpacing the US market in growth rates, with Celsius International only accounting for less than 5% of its total revenue. You can see there's tons of long-term runway left, even if comparing these are apples and oranges for several strategic reasons. Now, if you've consumed my Celsius content in the past, this next section was previously much more detailed because of the decentralized DSD network, but because of the August 2022 distribution and investment deal with PepsiCo, things have gotten a bit more simplified from the perspective of Celsius and cloudier from my perspective. But it's all good. There's still a ton of retail and distribution updates to go through that I think are extremely important. First and foremost, the entire DSD distributor transition was completed by 2022 year end. So Celsius has been fully integrated into the PepsiCo distribution system now for the last year, and then also fully integrated into PepsiCo's annual planning cycle. In terms of consumption growth, IRI data for the period ending December 31st of 2023 shows that Celsius grew 112% year over year over the last 4 weeks, 142% year over year over the last 13 weeks. That's significantly larger than the broader energy category, which grew 12.4% year over year over the last 4 weeks and 12.3% over the last 13-week period. In addition, according to the trailing 4 weeks of IRI all track channel data for the period ending December 31st of 2023, Celsius is now securely the third largest energy drink brand in the category. Its market share went from 4.9% in the fourth quarter of last year to 10.5% now. And I don't want to gloss over that accomplishment because it's the first time in over a decade that an energy drink brand not named Red Bull or Monster Energy has had a 10% share in the US market. How does Celsius push even further towards maybe a 20% share? It really comes down to one, increasing sales velocities, which rose consistently throughout 2023, and then secondly, increasing total distribution points, which is comprised of ACV and items per store. PepsiCo continues to facilitate ACV expansion for Celsius, supporting new customer acquisitions across broad demographics and new usage occasions. Currently, the brand's ACV is just under 98% compared to slightly under 91% the previous year. Additionally, in convenience stores, which, as you know, is the granddaddy of them all in terms of sales channels for energy drinks, Celsius has seen its ACV increase to 96.9%, which is up 7.5 percentage points compared to the same period last year. So, with Celsius at basically full distribution now, the TDP growth will have to come from increased items carried per store. Because while the average items carried per store has increased exponentially since the PepsiCo partnership, it still lags behind Monster Energy and Red Bull considerably. Going forward, Celsius will increase items per store through a combination of product strategies like flavor expansion, scaling the new Essentials lineup, and reintroducing iterated line extensions like its Fizz Free. Additionally, they will seek more store placements like leveraging cold display activity in Celsius branded coolers. In 2023, Celsius placed more than 10,000 Celsius branded coolers, which was an increase of over 300% year over year. Now, I want to move on to a trio of non-track channels that continue to play an outsized role in the Celsius growth story. And I'll start with e-commerce. So here's the deal here. You don't make money from selling heavy ass beverages online at a per unit price points that have any semblance of parity to sales channels like mass, grocery, or convenience. But I still believe, especially Amazon, is an extremely important part of the future of beverage, and having a long-term integrated sales channel strategy needs to be centered around it. That statement wasn't pointed towards Celsius because they have shown through strategic actions that they agree with my statement. But I see too few energy drink brands leveraging Amazon at the right pace and cadence within their sales channel strategy. According to Stackline data for the last 14 weeks ending December 31st of 2023, Celsius is now the best-selling energy drink on Amazon. They currently have a 19.7% share of the energy drink category on Amazon, which is just a hair ahead of Monster Energy at 19.6% channel share. In this quarter, Celsius reported generating $27.9 million in Amazon revenue, which was up 86% year over year. It was also noted that 2023 marked the first time that Celsius has generated over $100 million in full year Amazon revenue. The next non-track sales channel I wanted to highlight was food service, which now makes up 12.5% of the energy drinks brand's revenue that comes from PepsiCo. Celsius is seeing a long runway of growth opportunities in the food service channel, as they've been able to expand rapidly in thousands of colleges, hospitals, at-work micro markets, and restaurant locations in the United States. And it's arguably those QSR placements that are the most exciting because of its massive revenue potential. This is something that I recently talked about deeply with Caroline Levy, who's on the board of the energy drink brand, in a recorded piece of content. If you haven't checked that one out yet on my channel, it's a must watch. We talked about how Celsius is paving its own path in the customer's mind that's beyond the traditional energy drink need states. It's a marketplace phenomenon I spotted and dubbed On-Premise 2.0 in April of 2019, potentially taking share from carbonated soft drinks at lunchtime, has massive total addressable market potential. And it's important to remember that on-premise was an integral sales channel strategy when introducing energy drinks to US consumers in the late 90s and early 2000s. Fast forward more than 2 decades, and I believe the energy drinks category is now closing in on the beverage Mount Rushmore status. To achieve it, the on premise sales channel strategy might play an important role again to increase category awareness. But this time, it won't be the hottest bars and nightclubs, it will be fast food restaurants. And the last of the non tracked sales channels I wanted to highlight was wholesale clubs like Costco, which that specific retailer accounted for 12% of the total Celsius revenue in 2023. But in this quarter, Celsius sold $77.1 million dollars in energy drinks through the entire club channel, which is up 64% year over year. And surprise, surprise, Celsius almost hit exactly, actually $4 million dollars more on a channel revenue prediction I made in early March of last year. Now, that's a lot of energy drinks being sold through wholesale clubs, but I think there's substantial runway left in the club channel for Celsius. It could be $250 million dollars in 2023, which does have some margin impacts, though, to Celsius, as gross margins are typically lower because of that channel's pricing model, but also that there's some costs that are a tad higher with irregular pack sizes. But now that I'm a little tired from taking that prediction victory lap, I think it's probably a perfect time to end with some quick final thoughts. After sharing more data on the continued market share expansion in early 2024, Celsius CEO John Feldley confidently declared on the earnings call that the energy drink category is now a three-team race. But can Celsius really double its market share and more to reach Red Bull and Monster Energy? How about I answer that by sharing this called shot from 3 years ago? CEO of Celsius Holdings, John Feldley, did kind of throw out a pretty interesting nugget just to kind of make people think how big Celsius can ultimately get. If you look at Celsius's Amazon market share, it's 14.5%. If you take that and kind of extrapolate that out to the whole MULO market in terms of like all channels, that would make them about a $2 billion energy drink brand. Now, is that realistic? Maybe it could happen. I don't necessarily think it's going to happen anytime soon, obviously, but in the long run, it could potentially happen. But really, it's just to show that if all things are equal, Celsius does deserve better placements and more distribution. So now with an almost 20% share on Amazon, plus literally growing 10 times its size compared to 3 years ago, and I wouldn't bet against John Feldley's crystal ball. But I hope you enjoyed this YouTube video. If you did, consider hitting that like button to support me. Also, help me get to my new short-term goal of 4,000 subscribers by hitting that subscribe button. I'd love to see you join me on this journey, but we need to fix the fact that just over 90% of you that are watching this YouTube video right now are not subscribed to my channel, and that makes me extremely sad. But I do want to thank you for tuning in, and I'll see you on the next one.